Hey, good morning, everybody. Today is Thursday, November 19th, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Stocks closed sharply higher in mixed volume yesterday as the NASDAQ recorded an accumulation day, but volume came up short on the S&P. An accumulation day is a trading session where one of the major indexes closes higher on heavier trading volume. Accumulation is a sign of institutional buying in the market, which is what we're trying to identify. New lows continued to outperform new highs by a narrowing margin. Large capitalization stocks outperformed small, although small continue to outperform on a 10-day moving average basis. Advancing issues topped decliners by about a 10-3 margin on the New York Stock Exchange. Our market timing model on both the NASDAQ and the S&P 500 are now on a don't buy signal. But for a downward sloping 10-day moving average, both would have gone to buy signals yesterday. A don't buy signal indicates that we should be off margin, have our stops at their tightest levels, and should not be adding new positions to our portfolios. The O'Neill timing model, according to Investors Business Daily, is showing a resumed uptrend with 6 distribution days on the NASDAQ and 5 on the S&P. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution over a short period of time can be an indication that an uptrend is in trouble. Our timing models are giving us mixed bullish or cautious signals. Be careful in this market. I wouldn't be in any hurry to buy or sell at this point. Keep your stops in place and at their tightest levels on all remaining long positions. As always, be sure to follow your written rule sets. If you'd like help with portfolio management or with your written rule sets, please feel free to contact me. My contact information is on the homepage. Okay, let's take a quick look at our Spectrum Analyzer. What we're looking at is HGSI, High Growth Stock Investors, universe of over 8,000 stocks, sorted by a combination of the most powerful stocks in the most powerful industry groups. We've made a group of the top 100 stocks in this sort. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's plug these stocks into our Spectrum Analyzer and see where the strength is in the markets. Of the top 100 stocks in our sort, 11 were semiconductor devices, 5 were commercial and residential building equipment and systems, 5 were refining and marketing, 5 were application software, and rounding out the top 5, we have biotech, large pharma, internet media, and internet-based services. We seem to be seeing a lot of internet. We seem to be seeing a lot of biotech pharmaceutical. We've been seeing a lot of semiconductor devices recently, and refining and marketing is fairly new to this group. These all might be good places to look for strength in this market. Let's see what the NASDAQ Composite's up to. NASDAQ yesterday was up 89.18 points, or 1.79%. We closed at 5075, closed very near the top of our daily trading range, and we took out resistance at our 2009 to August trend line. Trading volume yesterday was higher than the prior day, giving us an accumulation day. For you followers of William O'Neill, the market is in a resumed uptrend. We've been in a confirmed uptrend since October 2nd. We have right now 6 distribution days on the NASDAQ. And right now the NASDAQ is really bracketed by support down here in the 4,900 area. That support comes from this low in the market, this high where it acted as resistance, and again, this low right here. And resistance is up near the prior high of 5164. Our market timing model right now is on a don't buy signal. Notice how the NASDAQ Composite closed above this envelope. This envelope that we show in gray dotted line, brackets our 21-day exponential moving average, which we show in pink, by 1%. In order for the market to go to a buy signal, we have to be trading above this upper envelope. The reason that we're not in a buy signal right now is because the 10-day simple moving average, which we show in green, is still trending downward. If that moving average was trending higher, we would be on a buy signal right now. Let's take a look at what the S&P 500 is up to. S&P yesterday closed up 33.14 points, or 1.62%. We closed at 2083. Trading volume was a little bit below the prior day. The S&P is in a resumed uptrend with 6 distribution days over the past month. Right now, the S&P is bracketed by support down here in the 2044 area and resistance at this trend line. This trend line is our 2009 to August trend line. Notice how in August the market broke below that trend line. That trend line now serves as resistance for the S&P 500, at least until we take that out. If we were to break above that trend line, our next area of resistance would be at the old market high, the prior market high, in the 2134 area. Right now, the S&P is on a don't buy signal. I want to take a minute and talk about what it would take for the S&P to get back to a buy signal. And so we're going to take off these markups. In order for the S&P to go back to a buy signal, 3 things have to take place. First, the 10-day simple moving average, which we show in green right here, has to be higher than the prior day. You can see that today it's lower than it was yesterday. Second thing is a 21-day exponential moving average, which we show in pink right here, has to be trading higher than it was 2 days ago. That actually is trading higher than it was 2 days ago. And the last criteria is the market has to close at least 1% above its 21-day exponential moving average. This gray dotted line that we show is a 1% envelope around the 21-day exponential moving average. Notice how the S&P closed above that level. And so 2 of the 3 criteria that we need to go to a buy signal have been met. The only thing that's keeping the market right now from a buy signal is a downward trending 10-day simple moving average. Before we go today, I want to take a quick look at a couple of stocks. The first one is Becton Dickinson. Becton Dickinson is in the healthcare sector, medical instruments and supplies. Becton Dickinson develops medical supplies, devices, instrument systems, and reagents used by healthcare institutions. Becton right now is in a first stage base. This is a cup and handle base. Very nice base right here. Notice how the volume has dried up in the base area. That's exactly the type of behavior that you want to see out of a cup and handle base. Becton Dickinson gets a 72% checklist rating, good solid checklist rating. We have a pivot point of $153.25. But yesterday we traded higher trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot, indicating that we can buy Becton Dickinson here in anticipation of the breakout at the 153.25 area. Gives us an opportunity to get in a couple dollars sooner. And the next stock I want to take a look at, Lithia Motors, is in the consumer cyclical sector, auto and truck dealerships. Lithia operates 130 car dealerships in 14 states, offering 30 brands of new and used cars and light trucks. Lithia also is in a first stage base right here. It's working on a cup and handle. Not quite as pretty a cup and handle as Becton Dickinson. Lithia gets a 64% checklist rating. We have a pivot point of $121.81. But like Becton, yesterday, Lithia traded higher trading volume than any down day in the past 10 trading sessions, which gives us a pocket pivot and allows us to get into Lithia a little bit before it breaks out at the 121.81 area. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson LaCours Incorporated believes to be accurate. Ohanneson LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.